Have you ever wondered if your house could become impossible to sell? Not because of a recession, not because of a market crash, but because insurance companies decide it's too risky. Across America, insurers are quietly pulling out of entire regions. And when insurance disappears, mortgages become harder to get. No mortgage means fewer buyers. Fewer buyers means falling home values. These are the 6 states where that problem is already becoming reality. Charleston now experiences frequent flooding, even on sunny days. Insurance costs along the coast have surged, and some lenders are becoming increasingly cautious about approving mortgages in high-risk areas. Homes are still selling today. The question is whether they'll be just as easy to sell 10 years from now. After Hurricane Harvey damaged over 200,000 homes, flood risk became impossible to ignore. Now FEMA is updating flood maps, and many homeowners are discovering their properties face greater flood exposure than they realized. For some families, flood insurance costs have become a major financial burden, making ownership far more expensive than expected. Phoenix is one of America's fastest-growing cities, but it's also one of the hottest. Extreme heat increases electricity demand, strains infrastructure, and raises living costs year after year. A city can grow rapidly, but if living there becomes too expensive, people eventually start looking elsewhere. And when people leave, property values follow. Wildfires have changed the insurance market completely. Major insurers, including State Farm and Allstate, stopped writing many new homeowner policies in parts of the state. As a result, hundreds of thousands of homeowners now rely on California's FAIR plan, often at much higher costs. A house that becomes difficult to insure is also a house that becomes harder to finance and sell. Louisiana is literally losing land. Coastal erosion and hurricanes have pushed multiple insurers out of high-risk areas. Some communities are already discussing relocation because maintaining homes there is becoming increasingly difficult. Imagine owning property that loses value, not because the building is damaged, but because the land itself is disappearing. Florida may be the biggest warning sign of all. Several major insurance companies have reduced operations or left parts of the state entirely. At the same time, some coastal markets have started showing price declines. The problem is simple. If a home can't be insured, banks won't finance it. If banks won't finance it, only cash buyers remain. And cash buyers in distressed markets rarely pay full price. Millions of homeowners are taking out 30-year mortgages on properties that could become dramatically harder to insure long before those loans are paid off. The scary part isn't that these homes are collapsing today. It's that the warning signs are already here. Insurance companies spend billions studying risk. And when they decide to leave, they're usually not guessing. They're following the numbers. The real question is, if the people who calculate risk for a living are leaving first, what do they know that everyone else is ignoring? If that blew your mind, subscribe.